Financial markets are still exploring the possibility of the QE tapering and the key interest rate hike by the Fed. The protocol of the recent FOMC meeting confirmed the regulator's intention to launch the reversal of the QE policy this year. However, macroeconomic reports show that the US economy may not be ready for sharp changes. Judging by the surge in consumer prices and the drop in retail sales, it's quite possible that the US production will also fall. High inflation and low consumer activity are the main indicators of a sluggish demand. Thus, the US industrial production may show a slower rise or even a decline. In any case, the report will affect the US dollar. The fact is that an ongoing rise in industrial production may lead to overproduction and the necessity to sell goods. Notably, this could be possible only after a drop in consumer prices. Such a situation could lead to lower inflation. In this case, the Fed will not have any reason to raise the key interest rate. As a result, the greenback may lose value. On Tuesday, the publication of the Reserve Bank of Australia meeting minutes will be the only important event of the day. During the recent meeting, the regulator remained the key interest rate unchanged at 0.10% and decided to continue reducing the size of its weekly purchases of the government bonds to $4 billion of Australian dollars, at least until the middle of February of 2022. It's highly possible that the protocol will read again that Australia's economic growth pace is not confident and depends on the withdrawal of restrictions. The regulator is likely to confirm its intention to keep the favorable monetary conditions and not to raise the key interest rate until inflation hits the targeted level of 2 or 3%. Some analysts suppose that inflation will reach the Reserve Bank of Australia's target only in 2024. Notably, the Australian dollar showed a tepid reaction to the meeting results. It's quite possible that it will ignore the protocol. At the same time, Wednesday will be a very active trading day. The UK, the Eurozone and Canada will disclose the inflation reports. According to the forecast in the UK, a rise in consumer prices is likely to remain the same, proving the necessity of a tighter monetary policy. Such signals may support the pound sterling. The Eurozone inflation figures also push the ECB to tighten its monetary policy. Thus, on a yearly basis, inflation growth significantly exceeds the ECB's target of 2%. The preliminary estimate unveiled an increase of 3.4% in consumer prices. The final data is likely to be in line with the preliminary figures, thus pushing the euro-dollar pair higher. In Canada, the situation is absolutely the same. The previous report revealed the fastest annual growth in consumer prices since March 2003. However, the Bank of Canada denies that the economy is overheating. Like the ECB, the Bank of Canada is likely to continue insisting that the key interest rate will remain at the zero level until inflation hits 2%. Notably, the regulator supposes that this may happen in the middle of the following year. You're watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals with InstaForex.